Good morning and good afternoon, everyone. I hope you are well. Today is the 1st of February, 2nd of February already. It's crazy how time flies sometimes. This is Dream Reality, a podcast series run by Idunn Consulting, and this season we're focusing on SME growth. What, as a leader of a business, should you be thinking about when you want to grow your business? Not the mindset side, the actual practical support, the practical tasks that you need to be thinking about. And today we have a really interesting guest with us. This is Rupert, and Rupert is the MD of businessloans.ie. Now, what does that mean? Are we just going to talk about loans and money? Well, let's see. I'll hand over to Rupert just so that he can introduce himself fully, and then we'll get into a bit of an interesting conversation.
Well, Alison, thanks very much for having me on Dream Reality. I cannot believe it is February already. It's, you know, my New Year's resolutions, some of them are slipping already, but it's time to stay on track anyway. So what I'll tell you a little bit about my business, Alison. So I run businessloans.ie. And what that basically means is I'm a business loan broker. So in Ireland at the moment, the pillar banks, they still have about an 80% hold on small business finance, and 20% goes to non-bank lenders. So this is a bit skewed compared to the UK, where it might be about 50-50. And in the USA, it might be 80-20 in favor of non-bank lenders. So Ireland is a little bit behind in terms of non-bank finance. So what I've done over the past few years is built my relationships with a range of different business finance options that are generally outside of the traditional banking scene. So what that means is I would generally have a chat with a business owner, identify whether they need working capital or assets or invoice finance or all these different types of finances, and get quotes for them and hopefully get them hooked up with the funds that they need a bit faster than banks usually.
Wow. So just on that, because, you know, honestly, I mean, if I wanted a loan, my first concept would be I need to go to the bank. So what are the kinds of options that are out there, and how do I find more information about it? I mean, obviously we go to your website, businessloans.ie, but other than that, you know, how would a business owner that's looking to grow and fund the growth of their business, how would they get their head around not going to the bank?
Well, first of all, there's very good reasons for going to your bank, especially if you're good at planning in advance, because the key thing is a lot of the time in business, events arise where you need funds in a quick amount of time. And often the bank loan application process requires more information and input from the business owner, which can get business owners bogged down. So you expect to have to put together detailed business plans and financial modeling. And sometimes your accountant is very busy. Accountants are very busy at the moment with pandemic related issues, revenue delays, and a whole host of things. So to actually get what the bank needs to process your application can be a real struggle at the moment. So basically, a lot of the time, business owners could go on Google and look for a non-bank loan or whatever. So you might find one or two providers. However, in Ireland, there are about 60 non-bank providers that I'm aware of. Like using a broker like myself, I would have a full range of different options where just typing in typical Google search is not so easy. So maybe one of the starting points would be to book in with your local enterprise office, and there are business consultants available at a very low price or perhaps even free. And they might have their finger on the pulse of some of the non-bank lending markets, but it's not guaranteed that they're experts in themselves. So sometimes it's just worthwhile using someone like a broker who can listen to the issues that you're having. Sometimes you might think that you need a cash bank loan, but your accounts might not be strong enough to support it. But really, when you dig a little bit deeper, you might have something useful like a decent book of debtors where invoice finance might work, or you might need a van, or you might need a machine where asset finance is easier for approval because it's secured on the assets. So the lender has that bit of safety to make that decision easier.
That's such great advice. I mean, I think obviously, you know, when you're a small business or a medium-sized business and you're thinking of growth, really you should be talking to your local enterprise agency and whatever that is within your region. But, you know, again, you need to make sure that you're doing your own homework and things as well. And those types of loans that you were talking about, I mean, those aren't the mainstream. Those aren't very well publicized, let's be honest. I mean, it's not everybody that would have heard about them, right?
Oh, agreed. And even like some of the main players on the market in the crowdfunding lending scene, which has been around for a number of years, but it has been up until very recently an unregulated market. So these businesses are operating certainly within the law, but the EU has been working on regulations, and you know it's slow moving, and they've only implemented these regulations which the market it welcomes, so that it brings it into a more regulated fold. And so there's a couple of options on the market, like equity crowdfunding and debt crowdfunding, where basically throughout the last few years, we've all been aware that negative interest rates have been, they're on depositors. So they've been making, like literally paying to keep their money in the bank. Now, this scene is going to change probably in 2022. However, in the past couple of years, if you were making negative interest rates, it was compelling you to put your money to use. So some people might be investing in businesses loans that might be in form of equity, and the Irish Venture Capital Association has seen like almost a doubling of input into early stage businesses for venture capital. Same with business loans. Like people can put money in and maybe make 6%, 7%, 8% interest by investing in business loans. So there's a range of different things for people who have money to lend with capital, and then there's the businesses that need that money. So it's been an interesting time for and technology has been assisting this. So if you're a business owner, there are all these different options available, but sure, it can be a bit confusing, I guess.
Yeah. And you touched there about, 2022 slightly changing, maybe looking at interest rates and maybe a little bit more regulation within some of the options that are out there. If you pick up the newspaper or read online some of the news, there's a little bit of talk about, a bit of a boom period coming in 2022, 2023, a little bit, and it's been compared to like the roaring 20s after the Great Depression. And we're looking at, our roaring 20s after the Great Pandemic. Do you see that? What do you think is really going to happen in the market? And obviously, we don't have a crystal ball. This is just an opinion.
Oh, well, sure. Yeah. I think the central bank has forecasted growth in Ireland of about 9% this year. Yeah. And in 2023, it's still forecasted for about 5% growth. So yeah, you're definitely right in saying that we are experiencing boom. Now, if you break it down into certain industries, some are finding it easier than others. So if you're in the e-commerce business, that's certainly an area that's had a major uplift due to the pandemic, and more people shopping online, conscious about or unable to go out to the shops that they love. So if you're in that area, certainly increasing the boom. But there's also challenges in the areas of supply chain, where China has been locking down its ports. They've very, the world's manufacturing industry has been suffering severe lockdowns, and that's been affecting the supply chain, Suez Canal and all that kind of thing. So there've been challenges if you're in industries where, before you might have had to order a small amount, and next thing you know, you have to come up with the capital to order large amounts, and then your money's tied up while there's delays in ports. So it's certainly an interesting market at the moment, but all in all, everything's on the way up for the next couple of years for sure. There is challenges within the interest rates. So while inflation is coming in, yes, that also means interest rates go up. So if you are a business owner, your costs are going up. You have to give all your employees raises this year, most likely. Prices of food and commodities and petrol and everybody's prices are going up. So that means if you're getting a bank loan, you can expect the interest rates to be ticking up now as well.
Mm-hmm. Oh, there's a little bit of a warning. So think fast, act fast, and be smart before the bank takes a bigger cut of it.
So with that being said, just in terms of interest rates, let's say it's not a major worry. Let's say if you're a typical small business owner and you got a 30,000 euro loan over, let's say, 3 years.
Yeah.
If you got an interest rate of 7% somewhere, and then maybe somewhere else it was going to be 8%, the difference in repayments every month on that 30,000 euro loan might only be about 15 euros.
Yeah.
So really, it's not a major concern for short-term business lending for smaller amounts. It's really when you're talking about longer-term lending and mortgages that these slight changes in interest rates, the impact is more profound.
Yeah, and that's a great point. It's all about understanding the impact. And I guess that's where really a broker, rather than trying to do everything yourself and Googling it all, that's where a broker really comes into their own, because they're really going to help you, help to advise you on exactly the impact and what is tailored for your need, right?
Exactly. I'll give you an example. Alison, like in the last few weeks, a recent client I helped is a brewery. So they're not the biggest brewery in the world. They needed maybe some working capital and some finance to get some smaller bits and pieces that asset finance lenders wouldn't touch. So they also had a bigger requirement to get some bigger kit. So like I would have talked to that business owner, assessed the actual requirement that they have and broke it down into different areas of finance that they needed. So I got some simple unsecured finance to the tune of about 60,000. And then asset finance lenders will probably move for a bigger amount over longer terms to get them the bigger brewery kit that they need. So a lot of the time it's a simple discussion and just having a natural conversation with somebody to see what's their growth plans for the year ahead and what type of finance actually fits. Often in your mind, you think I need this big amount of cash, but often pieces of kit, machines, and all those kind of things, they're much, much easier for lenders to make a decision on, because if your business, God forbid, something goes wrong with the economy, your business crashes, they can always take that piece of kit back.
Yep.
And there's residual value that they can calculate.
Mm-hmm. And then just on that, so you know, obviously it's you've been around for a while, you've a bit of experience. So what are really the most common types of loans and things that that you see people going for? Because I mean, there are a lot of, you know, like priming grants, feasibility grants that you can go through for through the local enterprise office. You have loans from banks, and then you have these asset loans, the asset financing, the debt financing, and things like that. Obviously, each one is a specific situation in a business, but what kind of trends do you see? Do you see that as a population and globally that we are happy to take on loans, or do we want to use the cash in our pocket? And if we're going to take on a loan, what type of loan are we more inclined to take? And is that the right decision?
Well, in my experience, it's always better to be overcapitalized than undercapitalized. And what I mean by that is often when business owner comes to me, they've let it go too late and they've started missing direct debits and standing orders, and the bank balance is operating too tight. So What that means is, from a lending perspective, the underwriter will look at this and go, there's no affordability for repayments. However, if they had and maybe got an overdraft facility from their bank, they wouldn't have bounced those direct debits or standing orders. Or if they had got a simple unsecured working capital loan just to have a buffer of working capital, it's much better. Now, you don't generally have an early repayment penalty with most of these loans. So let's say you took a 3-year loan or a 5-year loan, and then you've won that big deal, you've got a big cash payment into the bank balance, and now you have your own buffer and you don't need that cash anymore. Well, you can settle that loan early and save on whatever the remaining interest would have been. So time and time again, business owners just leave it too late to apply for finance, or they don't keep an eye on their cash flow statements, and they get themselves in a pickle. And that's what I would recommend. Just make sure you're covered with your working capital, and you've your eye on your ball. Like whether you have a CFO or you're a sole trader, and do up your cash flow statements and keep an eye on it. If you think you're going to have a tight period, if you have a seasonal business, just make sure you start the process in time to be well capitalized. Now, just to go on from that, Alison, for the different types of loans that are out there, first of all, a lot of people, the first thing that they will do is go for an overdraft with their bank. Now, in the past few years, and even on the last recession, a lot of those overdrafts became reduced, or they were withdrawn at short notice, and it put people in a situation. So Whether the bank will give you an overdraft or not, there are fairly comparable rates by just getting a simple unsecured working capital loan over a number of years. And that could be from a bank, it could be from a non-bank lender. So the process, it just means if you go with a bank, there's probably more paperwork and issues. So that could be a bit off-putting for a busy business owner. Or a non-bank lender. Usually they just want to have a set of accounts, few months, maybe 6 months bank statements, make sure that your tax clearance certificate is up to date, just think simple things like that. And generally a quote can follow in 24 hours. So that's the simple stuff. Then sometimes you need a lot more money than your accounts will enable a lender to give you. So it's all depending on how much turnover and profit you've done. But a lot of people coming out of 2020, they might have not shown much profit on their accounts, or maybe even a loss. So then you start thinking about secured lending. So that could be secured on an invoice. So if you have a good book of debtors and you're dealing with quality debtors, I would take your list of who your debtors are, and I could say, look, most of your book of debtors could be covered, and you can start cashing in those invoices early. So you might be waiting 60 days, you might be waiting 90 days. And what you can do is release maybe 80 or 90% of the value of the invoice right now, and then you get a final settlement when your debtor actually pays less a little bit of fee,
Yeah.
Asset finance as well, you have your hire purchase and leasing. There's also it's worth noting as well, there is the credit guarantee scheme still available. It's been extended till June. So for unsecured or asset finance, and a lot of these lenders, if you have been impacted by the pandemic, what it basically means is there's slightly lower rates still available, and there's no personal guarantees on these type of loans. So most of the banks and even the non-bank lenders for unsecured, they're going to make you sign that personal guarantee, which basically means even if your business fails, they can still chase you for this debt. So if you can get the credit guarantee scheme, there are plenty of lenders who have funds available on this scheme, and the rates are quite competitive. So that's still available till June. I think there was about 2 billion allocated to that scheme, and there was about 1 billion still left in the last couple of months. So they decided to kick it on again.
And you touched there, just I mentioned rates. So, for these other lenders and other mechanisms for loans that are non-bank or financial institution, are the rates comparable? So if you got an unsecured short-term loan through company X and compared it to short-term company loan through the bank, are the rates kind of comparable, or are you going to be looking at a completely different rate?
Yeah, well, I guess the rates generally with non-bank lenders are slightly higher. So it's a bit of a trade-off of, and sometimes you have to go to a lot of expense to get the information that the bank needs, because it's a more challenging, and you have to put a value on your time. The average business owner puts about 15 hours of their time into a bank loan application. So if you ask a business owner, what do you value an hour of your time? I think a lot of them are quite generous. They might say, I'm 100 euros an hour, or whatever they might say. So you got to factor those kind of things in. But the non-bank lenders generally, they don't have access to as cheap money as the banks do. So generally you might pay a percentage point or two higher, but you have speed, you have convenience, and you have a lender who will support you very quickly when a challenge arises.
And I think that's a great point. It's, yes, on paper, you might be looking at, comparing it on paper, but that's not really necessarily looking at the full picture. It's the time involved, the speed. And I think the speed, everybody knows that banks are not necessarily the most speediest mechanisms. And there is a lot of checks and balances. And if you're just not in a position to go through that for whatever reason, then, as you say, just paying 1 or 2 percentage points higher may be the best solution for your business at that time. And I think that's really, really good advice. So as an SME that's growing, I mean, you touched on it a little bit before when all about, making sure that they understand their cash flow and understand their liquidity. But what are the main areas of focus that a business that is maybe ready to thinking about growing, and they're just about to go into it, maybe they're tendering for some larger work, or they've just been awarded that large contract and now they need to scale up? What should they be really thinking about? what would be your little bits of advice or golden nuggets?
Well, I guess it depends on what industry you're in or what challenges you're facing, but a lot of it is down to the individual business owner and their attitude to risk, and how confident they are in the future, and also the level of funding that they require. So for debt funding, you might not be able to get what you need through debt, because you might need a big capital expenditure. And I'll give you an example of this. So I spoke to a couple of people recently. In Ireland, we were actually importing all our ice cubes from the UK. We didn't have the ice cube making machines in Ireland. So bizarrely enough, Ireland was importing most of its ice cubes into supermarkets. So they didn't have the kit. Crazy, wasn't it? So he needed, $1 million, 2 million. And what he did, he couldn't get it from the bank. He asked me about loans, but he ended up putting together this thing called an EIIS scheme. And basically it was an equity raise that got him the machinery that he needed, but investors chipping in funds into this had a 40% tax kickback. So it made it a sweetener for anyone who's a high net worth individual. They're going to either have to pay a lot of tax to the government, or else they can invest it in a startup and hopefully get a good return. But they also have that comfort that they have a 40% tax incentive in it. So that would be a really attractive way if you have a big capital expenditure. But most businesses are everyday businesses, and they might not be able to create one of these schemes or have that kind of a thing. So I guess there are certain types of finance out there that have less security offered by a business owner. So whether that's secured on your invoices, where there's no personal guarantees, or there's e-commerce financing that can help you pay for your ads and your stock. So there's a range of different options where you're not left personally on the hook. But if you have a great business, the banks and the non-bank lenders are always going to be there to support you. It just depends whether it's unsecured or secured, and that kind of thing.
Fab. Oh, so much advice there. So much, I think, for people to think about. There's really, I think it's important for us to realize that as business owners, we have options, and it's just taking a little bit of time and prioritizing, understanding those options rather than assuming we know already. Because the financing world and the mechanisms to finance have evolved so much that it's something that you need to stay on top of. And I think a broker who's aware of, the banks and the other mechanisms is definitely a really great way to understand what's best for your business and how can you finance that growth.
Agreed. And never forget that there's great help around. The business owner doesn't have to navigate themselves. They can engage with the local enterprise office, get mentorship. Their accountant is a great resource and really obviously has their finger on the pulse of their own figures. So never go it alone, and just seek good advice and get a good team around you, and you'll have your best foot forward.
Fabulous, fabulous. So this podcast is called Dream Reality. And that's a little bit intentional, because I would love to hear, what is your dream within the SME community with regards to financing, how we access it, how we view it? So how do you think it's going to play out for the future? And then what's the reality check? How do you think it will actually play out?
Well, yeah, there's certainly a lot of exciting things happening in the finance scene. I think that the access to finance is going to become easier and easier as the credit mechanisms become more automated with big data. I see this happening right now. And then from a consumer perspective, you should be able to plug something into your website where finance is embedded and easily available to help finance people who want to buy from you. That's going to be a big growing area. So I think the SME market overall in Ireland has challenges, especially for tech businesses, share options, raising capital. We have great companies out there like Scale Ireland, who are beating the drum and trying to get finance for those long tail businesses where a lot of investment is needed early on. I think that's one of the big problem areas right now that the government is looking into. So I think we're going to see good things coming to support entrepreneurs through 22 and 23.
Fab. I hope so. Fingers crossed. Fingers crossed. And then finally, I did ask you for a couple of recommendations. So first of all, do you have a book or a podcast that you love to go back to or that you recommend frequently?
Yeah, I guess for a book, I'm kind of obsessed with the 80-20 principle by Richard Kock. He is Tim Ferriss, the 4-hour work week. He borrowed heavily from his ideas, and basically it just says that 80% of the results are from 20% of the causes. So basically 80% of what we do is pretty much our time is wasted. We really need to cut through the noise and focus on what's important. So I try to keep that in mind throughout my day. And, you know, whether that's my marketing, my client base, who's important, who's making me, who's the easiest to deal with. And I think you should always be constantly conducting an audit with the 80-20 principle in mind.
Fab, that is a good one. And then a song. So if you're maybe a little bit low of energy or just having one of those days, what is a song that, you know, you put it on and it just perks you right up and energizes you?
Well, listen, I'm a huge Jimi Hendrix fan, so Jimi Hendrix All Along the Watchtower. If I need an extra kick or a bit of energy, I'll just blast that on.
Oh, nice. That's a great one. And you know, I can never predict what people are going to say for that song one, you know, because some of them are just so left field. It's a real eye opener on the personality in front of me. It's great. Look, thank you so much. I mean, I think that, you know, you really opened a whole box, not a Pandora's box, but a proper, you know, really informative session on what options are available to business owners, what we should be looking at and what we should be considering when we're going to grow our business and we need maybe a little bit of finance or a little bit of help to support that growth. And yeah, I think some really, really good advice. You can find Rupert at businessloans.ie. And thank you so much for your time this morning.
And thank you, Alison. Pleasure to be on Dream Reality and wishing you the best of luck for 2022.
Thank you.